Hello everyone, I'm John with JP Strategic Investments, and today we're going to go over CrowdStrike's third quarter earnings report that we just got today. I'll go over the general numbers, do a full analysis of the report, and then we'll get into what it means for the stock going forward. So let's dive right in. So first of all, I do want to preface this by saying that we don't currently own any CrowdStrike stock, but we have been watching the company, so that's why I'm covering this earnings report, because if we see something that we like and something changes in the report, we might buy into the stock if the valuation is right. So just to go over some general numbers here, CrowdStrike did $232.5 million in revenue and $18.6 million in non-GAAP net income. This comes out to a revenue growth of 86% year over year, with net income up from a loss of $13.4 million a year ago. ARR, or annual recurring revenue, increased 81% year over year to $907.4 million. This is also an increase of $116.8 million in the third quarter alone. This increase was due to CrowdStrike adding 1,186 net new subscribers. So just to give some insight here, for any of you watching that are unaware, CrowdStrike mainly operates on a subscription model. So businesses or organizations who need CrowdStrike services will sign up for a subscription to use different services from CrowdStrike. The company then has access to whatever services they signed up for during that subscription period. This is why CrowdStrike mainly focuses on their ARR, or annual recurring revenue. If they can continue to add and maintain customers, then their yearly revenue and profits will continue to grow. So the $116.8 million added to ARR this quarter is basically the annualized value of the subscriptions they added in the quarter. These companies may pay monthly or quarterly, but really CrowdStrike's goal here is to create a giant semi-passive income stream with these subscriptions. While the cost of acquiring a customer may be relatively high, once the customer is signed up for a subscription, the cost of CrowdStrike to service and maintain that customer are relatively low. This is evidenced by their lucrative subscription margin of 78%. If they're able to continue growing subscribers at this rate, they will do very well going forward, especially if some of those new customers are large companies who will be using a variety of their modules. Speaking of new modules, CrowdStrike continued strong module adoption throughout the third quarter, as customers with 4 or more modules increased to 61%, 5 or more modules increased to 44%, and 6 or more modules increased to 22%. For a little perspective on this, last quarter customers with 4 or more modules was at 57%, and those with 5 or more modules was at 39%. This is really important because the more modules a customer is using, the more money they're paying to CrowdStrike. This makes these subscriptions more valuable and will increase their already high subscription profit margin. Another reason this is a good sign is that it means CrowdStrike is getting new customers to sign up for more modules, and they are most likely getting existing customers to add modules to their subscriptions. The latter point here is especially promising because it means that CrowdStrike's customers are happy with their products and services and they see value in adding modules. This is really great for CrowdStrike because upselling existing customers is much easier than acquiring new ones, so the fact that they are able to do this will allow them to scale profits very rapidly. Considering that with the addition of new modules this year, they have a total of 16 modules, CrowdStrike should have the ability to leverage their current subscriptions and upsell existing customers even further. Now, as far as how this will affect the stock, obviously we can see that Wall Street is impressed because the stock is up over 11% in after-hours trading. CrowdStrike's earnings numbers did crush expectations, and more importantly, so did their guidance. Wall Street was expecting CrowdStrike to roughly break even, with earnings expectations between a loss of 1 cent per share and a gain of 1 cent per share. CrowdStrike's net income of $18.6 million crushed those expectations, translating to just over 8 cents per share. Not only that, but for the next quarter, analysts were also expecting 1 cent per share of earnings, while CrowdStrike is expecting a slight increase over this quarter of around 9 cents per share, bringing the full year guidance to roughly 21 cents per share, whereas Wall Street was only expecting 6 cents per share for the year. This should bode very well for CrowdStrike stock in the near future, and to be honest, we might even enter a small position depending on how tomorrow goes. Overall, this was a great report from CrowdStrike, and it shows that the company is still on the path for strong growth in the coming years. I hope you found this analysis helpful, and if you did, please consider liking and subscribing, and have a great day.